In this video, I'll be sharing a trendline trading strategy that works for scalping, day trading, and swing trading. I'll walk you through the indicator we need, how to set it up, and then I'll walk you through 2 long trade examples and 2 short trade examples. Anyways, let's get right into the video. So like I said, this strategy can be used for scalping, day trading, and swing trading. Right now, I'm on the 5-minute time frame, so this would be considered day trading. And the only thing that's different with this strategy, if you are scalping or swing trading, is that you'll want to adjust some of the settings a little differently than I do, but you'll probably have to do this regardless anyways, depending on the ticker you're trading. For me, I'm currently on the pound US dollar, so my settings might not work for you if you're on another asset. And also, this strategy does work for all markets. A lot of people always ask, oh, what can I use this strategy on? Or what are the best settings? Yada, yada. You guys have to understand that most strategies work on every single market. As long as there's volume in a market, then a strategy is likely to work. The only thing that's different is you might have to adjust some settings, especially when you're using indicators, because obviously indicators vary from chart to chart. Anyways, enough with that. Let's add the indicator to our chart. Head over to the indicators tab and search for the price action toolkit. Once you've added the indicator to your chart, follow these settings just like me. We'll want to keep fair value gaps enabled, disable the order blocks, disable the liquidity grabs, disable all of the market structures, and then disable the equal highs and the equal lows. Now, the trend lines are the first setting where you might want to adjust some of the settings depending on the ticker you're on, or if you're scalping, day trading, or swing trading. So as a day trader or a scalper, you'll want to use a lower sensitivity. This is going to make it so that trend lines are detected more frequently. But for example, if you're swing trading, you don't want super frequent trend lines forming, so you would want to use a higher sensitivity. So what I recommend to do is, if you're using the 30-minute time frame or anything lower than that, use a sensitivity of anything under 10. And then if you're using any time frame to trade higher than the 30-minute, I would use a sensitivity higher than 10. So after you've adjusted your sensitivity, scroll down and enable the premium and discount zones. And then you can click OK. Now that the indicator's set up, I just want to walk through a quick rule with how we'll be using these premium and discount zones. And I'm probably going to disable them because I don't want them in the way until we have a valid setup, as these are our final piece of confirmation. But anyways, the way we want to use these is, if price is inside of a discount zone, which is in here, we want to look for long trades. And if price is inside of the premium zone, we'll look for short trades. So we won't look for short trades when price is in the discount, and we won't look for long trades when price is in a premium. Now that you understand this, I'm going to disable it off my chart until we're ready to use this information for taking a trade. With that being said, let's get into the first long trade example. All right, here we have our first long trade example. And I just want to let you guys know that I did add another version of the price action toolkit to my chart, because the one that's showing the trend lines, I have to enable the show historic zones so that I can show you what this looks like, because the first step of a long trade is a break of a bullish trend line. So if I had this disabled, you can see that the trend line would actually disappear. And then I didn't want to clutter up the chart with a bunch of invalidated fair value gaps. So on the other indicator, I enabled fair value gaps, and I have the show historic zone setting disabled. Otherwise, all these fair value gaps would have been plotted, and it's kind of annoying. So moving on though, like I was saying, the first thing we want to look for with a long trade is for a bullish trend line to break like this. And what we call this is basically a liquidity sweep. Now, it's not your traditional liquidity sweep where price comes to a low or a high and sweeps it. This is called a trendline liquidity sweep. And after we have this liquidity sweep, what we'll wait for is for price to form a bullish fair value gap, which is what we're going to use to take our entry. So as you can see, price forms a bullish fair value gap. Now, what you'll want to do is go back into your indicator settings and enable that premium and discount zone. Or if you already had it on your chart, you won't have to do this. So as we can see, it's very close, but the top of the fair value gap is still in our discount zone, because the equilibrium starts here in the middle, and we can see that this is below that. So this fair value gap is valid to take a long entry on. So we'll just set a limit order to buy once price retraces back to the fair value gap. And then you can set your stop loss a few different ways. You can use the swing low like this. You can use the bottom of the gap. It all depends on what you want to do. I'm going to set my stop loss at the swing low, and then I will just target a 1 to 1.5 risk to reward ratio trade. So unfortunately, with this trade, price never actually ends up hitting our entry it just keeps shooting up. So we wouldn't take this trade. But the idea is we're looking for a break of a bullish trend line, price to jump up, form a bullish fair value gap, retrace to the bullish fair value gap, and then take an entry. And we only take this entry if price is in a discount. Otherwise, we're buying too high and we're not getting the best possible entry. So now let's get to another example where hopefully our entry is reached. All right. Here we have our next potential long trade opportunity. We have this bullish trend line that ends up getting broken. So what we're looking for is for price to, one, climb back up. So we have our liquidity sweep. And then two, we want a bullish fair value gap to form. And then after that, we can look for our extra conditions before we open up a position. So here, price climbs back up to that same price level. So this is our liquidity sweep of the trend line. And now we're going to wait for a bullish fair value gap to form. All right. As you can see, we got our bullish fair value gap over here, and another one is about to form right between these two candles once I click this and go to the next candle. So what you'll do is you would take an entry when price retraces to this gap here. I don't know why TradingView doesn't draw the fair value gap because this candle did actually close. It's kind of annoying, but basically we will take a long entry here if we are in a discount. So I'll go into the indicator settings and I will enable the premium and discount zones. Okay, now something to note here is that this FVG is in our discount because it is at the halfway mark of the equilibrium. So this is still valid FVG, but the one here between these three candles, but the FVG would be right here. You guys will see it when I click next on the candle and it pops up. Basically, our entry would have been up at this white line, and as you can see, that's actually in the premium. So we do not want to take entries in premium when we're looking for long trades. But this other FVG down below is actually in the discount. So we can take our long entry when price retraces to it. Our stop loss can go at the swing low, which happens to be this candle here. You could also use these candles if you want, but I'm seeing a lot of long wicks down here. So just to be safer, I am going to use the lowest low, which is this. And I would set my target at a 1 to 1.5 risk to reward ratio trade. So let's see how this trade actually plays out. Okay, we get a big rejection candle right away. And as you can see, the FVG did finally draw. I'm not sure why it didn't draw the candle before. But anyways, we get a fat red candle, comes down, hits our entry. So now we are in this trade and we won't touch anything. We will just let the trade run. All right. And as you can see, the take profit was reached. The biggest takeaway from this trade is to make sure that your entries are within the premium or discount, depending on a long or short trade. So this was a long trade, so we want to make sure that we are buying inside of a discount. So it's a good thing that we double checked both fair value gaps to see if it's in a discount or a premium. And it's also important to mention that in a live market, you guys probably want to keep the premium and discount zones enabled just because you don't have as much time as I have right now when I'm in replay mode showing you these trades after they happen. You have to make quick decisions in real time, which is why you should just have the premium discount zones on your chart already. And if you guys want a quicker way than having to jump in the settings and scroll down every time, what you can do is just add a third version of the indicator to your chart and then only enable the premium and discount zones on that version of the indicator. So once a valid setup forms and you want to make sure it's in a discount zone for a long trade, you would just go and toggle the indicator on, for example. I didn't add it to my chart, but I hope you guys understand what I'm trying to say. Anyways, now let's get into the two short trade examples. All right, now we've got our first short trade example. So what we're looking for is a bearish trend line for price to sweep liquidity of this bearish trend line and then come back and close under that same level. So as you can see here, we had the trend line, price closes above it. And now what we're waiting for is for price to come back around this area and close below here. All right, so as you can see, it's kind of moved very fast. Price comes back, closes below this level, and we do get a few fair value gaps here. So I'm actually gonna have to come back a little bit. So price comes back, we're below this trend line. A fair value gap would have formed here. It's gonna form here, as you can see. It's pretty obvious, this one. And what we'll do then next is just check if we are inside of a premium zone. Because if we're in a discount, then we're not going to take any trades. We only want to be in a premium zone when looking for short trades. So just jump into the settings and enable those premium and discount zones. And as we can see, we are in a premium, which is perfect. So what we'll do is take a short trade once price retraces to this fair value gap. And we're going to set our stop loss at the swing high, which is up here. And we're going to target a 1 to 1.5 risk to reward ratio trade. So as you can see, this trade does end up hitting the take profit. And just like the long trades, it's very simple. We're looking for that trend line break, the liquidity sweep, a fair value gap, and then we're confirming that we're getting in the market at a good price. And we're doing this by making sure we're inside of a premium for short trades and obviously inside of a discount for long trades. All right, here we have our final short trade setup of this video. As you can see, we have a bearish trend line that was detected here. Price sharply closes above it. So now what we're looking for is for price to reverse, close back below this level, which is kind of where the trend line ended. And then we're looking for a bearish fair value gap so we can use that for our entry. All right, so after price closed below this level, we waited for the fair value gap, which we get right here. It formed after this bearish candle. So we would take a short entry when price retraces to the fair value gap. But before we do that, we just want to confirm that price is actually inside of a premium. So we'll enable the premium and discount zones. And as you can see, price is in a premium. So this would be a valid setup to take. We'll take our entry when price retraces to the bottom of that fair value gap, and then we'll set our stop loss at a swing high. Now, looking at this chart, I see two spots we can place it. We can either one, place it up here at this tall wick, or place it up here at the ultimate swing high. So it all depends on your risk tolerance and how you are as a trader. Personally, seeing this setup, I would just place my stop loss here. Either here or up here works just fine. And again, we're going to target a 1 to 1.5 risk to reward ratio trade. And this trade ends up hitting the target down here. And this was the last trade of the video that I will be showing you guys. But if you have any questions about how to use this strategy, or you have some suggestions to improve it, please by all means go in our Discord server, leave a message, and share it with the rest of the community. Anyways, I hope you guys all enjoyed this, and I hope you guys have an amazing rest of your day.